Well, hello everybody, Michael Silva here. Let me tell you something, you're not going to want to miss the next move that comes from this. That's a chart of the S&P 500 on the daily time frame. This is the NASDAQ composite coiling up as well. We got many signal charts that are starting to turn positive. There are some risks in the market per usual. We're going to be discussing all that and more, including the upcoming earnings, expected moves, on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical analysis and intermarket analysis. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated. And subscribe to the channel if you haven't done so already. And I'm in 4K right now, I think. Woohoo! Let's get into it. All right, people, welcome back to the show. We're going to start off here looking at the NASDAQ composite. Yes, the NASDAQ composite on the weekly time frame, which means that every little tiny candle on my screen represents 1 week of data. Currently, we're up on the week, so not a bad start. But I wanted to just reiterate here from from the last week's show, my last episode, was the Bollinger Bands, how they were contracting and getting all coiled up. They dropped even further into contraction to 8.94. Okay, now there's been a few times where we reach down to these levels and we typically get explosive moves, whether that's to the upside or downside. And we're right there again, coiling up. Now we're in a bullish trend, so this could very well be a bull flag taking place. Now, there's going to be some intricacies to knowing not to just enter in blindly. You need to look for key levels to get broken, so we're going to talk about those and more. If we take a look at the NASDAQ composite on the daily time frame, today we gapped down, and it was a pretty nasty looking day, but I'll show you when I get into the S&P 500 on the expected moves that it was actually an expected move that we tagged today. And we finished slightly down on the day, but we did end up on more volume. We started down and we closed a lot higher. So this right here is actually a bullish as it stands. Now, if we start breaking down the low of this day, be more on guard. Why? Right now, I'm showing you a chart with 3 different colors on there. It's blue, red, and green. What are those lines? Those are EMAs. Which ones are they? They're the 5, the 10, and the 20, okay? The 5, 10, 20 timer, old school. Okay, when they start to kind of compile themselves right over here, that means price action's typically going sideways or coiling up. It happened right here. And if you go back to when this was taking place and you look on my YouTube channel, we talked about it. And we said, get ready for another explosive move in the near future. We actually exploded up, got faked out here, boom, and we saw the explosive move to the downside. Now, when you have a trend, you typically have a bullish trend where the blue is above the red, which is above the green. That's 5 stacked on the 10, stacked on the 20. Okay, on the flip side of that, when they all cross over, it's a bearish trend when you have the, let me just redraw this out upside down. The 20 is above the 10, and that's above the 5. Okay, so blue, then red, and then green. Now, as it stands right now, we have the 5 above the 10, the 10 just crossed above the 20, and price actions above them all. So in order to be more bullish, you obviously want to get above that 13,600. Now, when I look at this from just a technical standpoint, we have a high, a lower high, a lower high, a lower high, and a lower high. Okay, so even if we were to get above here, we still want to take out that 13,700, and you could look at this as a possibility of, just a trend line like so, right? Potentially a bull flag that's forming, as we've kind of pointed out on the weekly time frame. So this right here is the possibility or the potential to have a bull flag potential breakout here in the very near future. And we're right at kind of the cusp point where we can see that explosive move. If I look at the S&P 500, you can see here the 5 is above the 20 and the 10. However, the 10 is still below the 20. Now, price action's above it, and you can see price action's kind of just going sideways. So the longer we stay above at this 43.75 level, it's going to bring this into it, and we could potentially start to see a trend back up to the upside. Okay, but we'll get into more key specific levels in the S&P 500 section. Now, if I look at the NASDAQ summation index, we're now about 5 trading days on the buy signal. We had this bullish divergence as price went lower. Our indicator told us that a bounce may very well come. That bounce came, and as we already pointed out, right, it's still a lower high, so we need that high to be taken out, and that could be the next move that kicks off where you would not want to miss it. The NYSE summation index is now 2 days on a bullish crossover. Okay, we saw a big day today actually in small cap stocks in the broader market, and this thing gave us some insight to that potentially taking place. We also had the bullish divergence forming here on the NYSE McClellan oscillator. Okay, another thing that I found interesting was the NASDAQ record high percent index. This chart is reading now 19.99. Now, it'd have to close the week down in that low reading. And then when we cross back above the 35, that's the breadth thrust. And that has marked many different bottoms in the NASDAQ 100. And if that is the case, as price is just kind of consolidating here and we get a breadth thrust, that would add even more benefit to us to a potential bull flag breakout. Now, if I take a look here at the SPX, I want to just, reiterate something, because there's typically a lot of sentiment and a lot of emotion that comes into getting ready for some big moves. And, the S&P 500 was down here, right? After a big fall, boom, obviously a lot of fear. Actually, down here, we made a video and you can go back and look at it. We talked about, extreme greed and extreme fear from the CNN Fear and Greed site, right? So October 3rd, that was the case. We had an 18 reading. It was extreme fear. That was also the time where if you looked at all these different index products and the percent of stocks above their 20-day moving averages, what you'll notice here is they were all hitting these extended readings down to the downside. And that's typically where things get oversold and you can see bounces. And guess what? Now we started bouncing, right? Bounce, 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 bounce. This was also during the time where, people, you can see, however, we keep dropping like a brick. Cool signal. Well, that was right here on October 3rd, and we've ripped up since that point. So the point of me showing you all of this is because people don't typically want to believe that the next move could be exactly opposite of what they think. So we need to look from both a bullish standpoint and a bearish standpoint, despite what sentiment may be, okay? If we take a look at the 10-year yield, we're going to get now into, yes, price action and signals have been looking good for the overall markets, but there are still concerns out there. One of them is the 10-year yield. Look at this thing rocking like a rocket ship, right? It finished at a new 2023 closing high today, right? It's right there. It closed at 4.84% or 48.47 when looking at the TNX. Okay, so this thing, typically when you see this rock off like a rocket ship, obviously bonds get hit, right? So we had bonds, we had a big down day, we had a big gap up, big down, down. So a lot of volatility in bond land right here. But more importantly, when you see the rising yields like this, it puts pressure and can put pressure on growth stocks. So you saw today, like the Qs finished, NASDAQ 100 was the worst performing index product when you compare it to like the S&P 500 and small caps like the IWM. Now, if I take a look at the yield curves, the 10-year and 2-year and the 10-year and 3-month, I found this to be interesting right here. We had a pretty big move in the yield curve of the 10-year and 3-month yield curve. So for this to uninvert, which is typically where we get more pressure on the markets, and I've showed these charts multiple times, but if I look at this, the 3-month is way up here at 5.62%. So the 10-year yield, right? Either this would have to come down while the 10-year stays flat, or, stays here and the 10-year yield goes up, or the 10-year yield goes up and this comes down, whatever the case may be. But we're at 4.83 as it stands. And if I look at the 10-year, 2-year, this is now minus 36 basis points inverted. And you could take a look, the 2-year is at 5.19. And this is pretty wild because we saw a spike up today, and this is a new closing high here too. But if you look back to the left of the chart, I mean, we're literally almost about to take out the 2006 high, which we're not too far off. And if I were to zoom in into this area, right over in this area region right over here is actually the spike led to the banking crisis that recently happened that people have already apparently forgot about. Now, if we take a look at this ratio, the S&P 500 over TLT, what I've noticed is that when this ratio puts in a higher high while the S&P 500 puts in a lower high, that right there is a negative divergence, and it could lead to sell-side activity. And the last time we talked about it was this divergence right here. So the S&P 500 put in the lower high, the ratio put in the higher high, and you can see, guess what? Well, we actually fell pretty much on cue right there. Now we're starting to bounce a little bit. Well, this also now had a new closing high. So this divergence is still technically building from a longer term perspective. I like to use it on the shorter time frame divergences, but it is still worth noting that a divergence is still potentially underway here, which is a little bit of a concern. You also have a dollar that, right, we saw a big move up, price action came down. We saw this big move up, price action came down, and now we're kind of just going sideways. We finished slightly up today while the market finished relatively flat. So if this is just consolidating here and we have a move higher in the dollar, that could continue to put pressure on the financial markets. Copper saw a large bottoming tail potentially today. So if we start taking out the high of today, maybe perhaps we get a bounce in copper, which could be good for the overall markets too. But when I look at this from a longer term perspective, just about out to 2022 or even 2023, copper, which is a global commodity, that's why they call it Dr. Copper. It's good to know how price action is trading because it has a good gauge on economic activity. It has been breaking down while the S&P 500 has been rising. So that's a little bit of a concern there. Obviously, we have a lot of volatility in oil. Remember, when oil rises, right, it backed off a little bit today, but when oil rises, the 10-year yield we saw rise, oil rose, and then typically there's a strong correlation between oil and energy stocks. And when energy stocks show leadership, that's typically not good for other stocks in the S&P 500. And as it stands right now, we could very well be, bear flagging as this broke down from here. We had that negative divergence. We ran into that resistance. But if we start recouping this 50-day and start bouncing from this level to come try to retouch this, prior area of resistance, that could spell more trouble out for the markets as well. We talked about how the markets performed today. It was relatively flat other than small cap, mid cap stocks. Out of the 11 sectors, energy did lead the way. No surprise there because, the 10-year yield did really well and it's a rate sensitive type sector. Also rate sensitive sectors are utilities, right? We saw technology down there. Real estate's another rate sensitive sector. So you can really see what, how important it is to just keep a close eye on those yields. All right, so going on deck for tomorrow, going into the open, we have a bunch of different companies reporting. Some big names in the S&P 100 is Procter & Gamble, Morgan Stanley, Abbott. I believe those are the only ones in the S&P 500 right here on this list. But after the close, we got names of Tesla and Netflix. And Tesla is going to be an important one to watch. As it stands now, there's about a $15 expected move on Tesla, and this one can control a lot of order flow in the overall markets. It's a large market cap name, bigger market cap obviously than Netflix, so I'm not too worried here, but that is a monster expected move with some strong implied volatility there too as well for Tesla. Now, if you want to take a look at where these may end up, go ahead and screenshot this. These are the earnings expected moves for Procter & Gamble, Morgan Stanley, Abbott, and so forth down the list. This is where they closed today. And then going into the opening of their earnings, these are their expected moves. That's plus or minus. So plus or minus, they can go up 27, down 27. Procter & Gamble up 4.52, down 4.52. These are the levels mapped out so you can put them on your screen if you're looking at key levels. And that even included the 2 standard deviation levels there too as well. All right, so if we go into the macro calendar, tomorrow is Wednesday. We got building permits. We got some Fed speak, some more Fed talk coming out. Thursday, we got Fed Chair Powell, so that'll be one to watch there too. And remember, it's just important to know when these things come out, right? So this is an hour before the market opens up. Then we have Fed throughout the day, which can add volatility into the overall market. If we go now and break into really some key levels in the S&P 500, I wanted to call out a couple of things. So this looks like, a wild drawing on my screen, and there's a reason for that because this was a head and shoulders top pattern, right? We broke down, we had an inverse head and shoulders pattern, we broke out. And the reason why I'm showing you this is because you can see that it's like upside down land over here. You have support, broke down, it ended up being resistance. And then we started getting these bottoming tails right here as price pulled back. So the reason why I'm calling this out is because this could have been a breakout. This is just a back test. And then perhaps, right, if these signals hold true and we start getting more breadth, if the price momentum oscillator starts turning back up again, this could open the door for a shot back to the all-time highs, okay? And remember, we're coming into a potential bullish area for seasonality. Okay, so there's obviously a lot of risks that we already pointed out, but there's also a lot of bullish developments. So what we'd like to see, we'd want to see that 5-weekly EMA price hold above it and it start to curling up. So as long as we don't take the low out of the current week, things are good. Or closing below that 4,300 could spell out some it could spell out potential further sell side activity. Now, the last time we really talked about a big turning point was this bullish engulfing candle. And we talked about it. We said basically, I think the video was called Let's Get Ready to Rumble. And the price action here, right, it moves between expansion and contraction. We had these 3 candles. They were inside trading days. We said break above the high, play it to go higher. Boom, we broke higher, a lot higher on some strong volume. And we haven't taken out that low. So this is actually still active, okay? And we've been moving higher, and we're above that quarter to day anchored VWAP. Now price is starting to coil up, albeit a pretty volatile chop box right there, as we're just kind of right below that gap and potential resistance. Now, if I flip over to up here, this is the 2023 high, and this we called out that day as a bearish engulfing candle, and it was on some pretty strong volume, and we started breaking down from that point, and it's held as resistance. Okay, so in my opinion, if we're going to get, if this is bearish and this could be bullish, what can you potentially see? Well, here we saw, strong move down. Okay, well, we saw a strong move up. Okay, well, and then we saw a strong move up, and then it started moving down. So it's always possible to see a strong move up, pullbacks take place, and so forth. Okay, that's more than healthy. So from this time frame, you would not want to take the quarter to day anchored VWAP out. And then if you're a little bit longer term, you would not want this low to get taken out. So right here, you can very well be bullish, but you just need to know where your risk lies. One other note here I want to call out is the volume down beneath us. Just take a look at the red bars of volume. There's a lot of distribution taking place. Yes, we saw a big green day here on the bullish engulfing, so that is positive. But even on the down days after this move, we're getting a distribution size volume day. So just be aware that this could very well still be one of the pullbacks within a downtrend. And the reason I say downtrend is because we have so far a series of lower highs stepping down. And those lower highs, it could last all the way to 450 on the SPY. Okay, if we take a look at the SPY on the 15-minute time frame, we mentioned, the first initial pullback of the day. It was a little scary, but if you knew the daily expected moves, if you watch these levels, basically it started gap down right there. Then we saw this volatile move to the upside right at around this point over here. There, if you look at market net flow, there was some signs saying, hey, be careful on this, basically watch out. And we saw that little pullback. Now, overall, we were above the week to date anchored VWAP, so that's positive. I actually even applied a week to date low and a week to date high, and they both finished within this area, and price action was above it. So we close in a positive spot. We'll see where we open. But we're also above that quarter to day anchored VWAP, which we mentioned. We're above a 5-day moving average, but albeit we are in this chop box taking place. So we're seeing, volatility, build up over in here, chopping back and forth. So the break of one of these, of these ranges can create, a very, very strong move to come. Okay, so what levels am I really watching? Well, this level of resistance has been holding. We saw a little click above it today, but I think if we get above that, that still opens the door to the upper weekly or upper daily expected move, which is 439.16. Now, if we start breaking down the low, right? So this, say, getting back below the 5-day moving average from a shorter time frame, I'd say just watch out and be more cautionary, right? We got below here and we say, okay, it's bearish, but with caution. Why? Well, we gapped up. That's why you got to have the caution. And look where it gapped up to. It gapped up to the 5-day moving average. Intraday that day, the prior day on Monday, we pulled back, a very violent pullback to where? The 5-day moving average. Hey, we got below it, but it's still rising. So it's bearish, but with caution because we can see snapbacks. Boom, we started rising up, and where did we finish? Well, basically right there, kind of chopping around that 5-day moving average. The longer we stay here and kind of chop around, this will start to flatten out, which means that the trend is going neutral. And if we go neutral and start breaking below it, then we can potentially go into decline. And that's where you really want to be careful, is if we start to decline. But as it stands in this current moment, we're not far from breaking down below. It is still rising, and that is a positive sign. Okay, now I think I updated the right expected moves. Yeah, no, sorry. The daily expected moves, my bad, my apology. These are the correct ones. They're very similar. But the daily expected move is 439.26. The lower is 432.78 for going into tomorrow. This was showing today's daily expected move and where it landed. This one is the updated one. If you want the chart deck, just download the chart deck. It is in the pinned comment or in the thread if you're watching this on Twitter or X, I should say. Okay, if we go on one more chart, these are the gamma exposure levels. This is a big area of confluence here, so I wanted to update you with the total flip levels and the next expiration flip level. And you can see there's a 4,400 spot gamma exposure level here. The daily expected move is right above that. For the SPX, there's a gap fill right here. So if price were to kind of break out of here, we really want to see price start closing above these levels and seeing strong volume above this 4,400, because you can see here the gamma exposure level. This can act as a potential area of resistance. Then you have the daily expected move and so forth. Okay, so if we can close up in this area, that can be a positive sign to really get going. But be very careful, because if we start breaking down below the low of today and closing below there can be a very big snapshot to the downside. So remember, volatility, it moves between expansion and contraction, right? And when it contracts, we can see very, very, big burst type of moves take place. And what we're doing here is you're seeing, volatility kind of build itself up in here. And if we get a big breakout, it could be very positive if you're in the right direction of the market. But if you get a breakdown, it could be very positive as well, or it can at least, get you out of a position. So very easily on the daily time frame, you just look at the low and the high and look to see those breakouts on the SPY 15-minute time frame. If we get back below the 5-day moving average, throw up the cautionary flag, because it could get proceed with more caution as this turns over. But as it stands now, we're above key levels on these larger time frames. We're above the year to date. We're above the quarter to date. So it really comes down to how you want to perceive risk and on what time frame you want to see it. That's all I got for you on today's episode, everybody. Hope that helped out. Just be prepared, because this next move, you're not going to want to miss it. See you later.